One of my most commonly asked questions is, I know I should be investing, but how do I even start? In today's video, I plan to cover every question you might have. So before I go into how to open up any accounts or what I actually invest in, I want to say if you're asking this question, you're totally on the right path. Investing now, whatever age you are, will help set your life up for financial freedom. Let me explain the importance of investing. So the value of $100 today will not be $100 in 10 years. It's going to lose value. Think of it like this. If you're buying a cup of coffee for, $4 today, in 10 years, that might be $6 because the US is printing more money. Therefore, the money you have right now is losing value. Another thing is, if your money is sitting in a savings account, the interest it's growing is not outpacing inflation. Your money is probably growing less than 1% a year in that savings account. Inflation is growing 3 to 4% a year. So even with that interest, you're still losing money. So the key is, start today and don't wait. Before I go into anything else, I want to say I'm not a financial advisor, so anything I say should not be taken as financial advice. Everything I say is from what I've learned and what I would personally do if I restarted investing today. Okay, so you want to start investing. Your first step is opening up a brokerage account. Think of this as like an investing bank account. It's where you're going to store the money you're investing. I want to say if you already have an account open, skip with the timestamps ahead to the next section. A few of the options I've used that I really like are Fidelity, Robinhood, and then Schwab. I've had success with all of these. They've been easy to use. You could buy them on the App Store, and you can be set up within a day. I will say I found that Robinhood is probably the easiest for a beginner to use. They pride themselves on being beginner friendly and helping everyone start investing. There are a few things you're going to need. A username and password, you're going to need your social security number, and banking information to actually transfer that money into your account. One thing that I do personally is I write down my username and password on a piece of paper rather than storing it on my cloud. I just feel like this is a safety thing and I feel more comfortable doing it. Whatever app you decide to use, it will guide you through that setup process. The setup process doesn't take more than probably 10 to 15 minutes as long as you have your information. Okay, I want to talk about an alternative option. So you have your normal investment account. This is a brokerage account. There's also what is called a Roth IRA. This is a retirement account. There are tax benefits to this. So any tax money you put into that account, you could withdraw after the age of 59 and a half tax-free. This is probably the most popular retirement account out there, and it's great to start investing in that now, whatever age you are, to set yourself up for retirement. Okay, so you have now opened up an account. So what do you actually invest in? Most people should be investing in ETFs, which are exchange-traded funds. Think of it like this. This is a basket of stocks. So I actually have this basket right here. I'm going to explain it to you like this. So let's say everything that is in this basket is a company. So let's say this represents, Amazon. This represents Google. I know a lot. Two Rubik's Cubes. This represents Meta, Nike, Starbucks. All of these companies are in this basket. So what I could do as an investor is say, hey, I don't really know what to pick. I don't know what stock's going to do well. I don't totally know how to research companies. So I'm going to say, hey, let me buy this basket and own all these companies. This is a great way to limit risk, have steady returns, and stay diversified. You don't need to spend hours or days researching companies. So there are a lot of ETFs you could choose from. Or some of the most popular ETFs are VOO, there's QQQ, and then there's SCHD. So what does VOO track? What are the companies inside of VOO? The companies inside VOO are the S&P 500 stocks. If you don't know what the S&P 500 is, it is the 500 biggest publicly traded companies in the US. So if I went out and wanted to buy VOO, I now own those 500 companies in the S&P 500. And what's cool about this is it's not always the same 500 companies. It's switching, they're taking companies out and putting new ones in. So it's being actively managed for you to have optimal returns. The ETF QQQ follows the NASDAQ 100. This is more tech-heavy companies, higher growth companies. If you want to own more tech companies, this would be the one for you. And then SCHD is a dividend ETF. If you don't know what a dividend is, it's basically a company is paying you to own their stock. So let's say I own a company with a 4% dividend yield. Not only can I make money from that stock price actually going up, they're paying me 4% to own it as well. The stocks in this ETF are normally more stable and established companies. So now that you know about a few good options for ETFs to buy, how are you actually going to start buying them? So one of the best investing strategies out there is dollar cost averaging. So this means you're going to set a certain amount weekly or monthly to invest. So let's say you choose $100 a month. So every month you're going to invest that $100 into that ETF, regardless of if the market is up or down, whatever's going on. What this does is, in the short term, the market is always, going up and down. It's a wave. In the long term, the market will continue to go up. So when you dollar cost average, this means you're buying when it's up, when it's down. You're just smoothing out the ride. This way, you create discipline and you have a set strategy to just continue to invest. One of the things dollar cost averaging helps with is not trying to time the market. Timing the market is where people get in trouble. You might hear people say, I'm going to wait to invest until the stock market crashes. The problem is no one knows what's going to happen, when it's going to happen, and how bad it's going to happen. So you just always want to be investing. Okay, so there are a few things you should do before you start investing. One of them, and this might depend on your age, is have an emergency fund. So this is normally a fund of 3 to 6 months of expenses. This is because, anything could happen. You might lose your job and you might not be making money for a certain amount of period, so you want to have that emergency fund ready. There might be accidents or medical emergencies. You just want to have money on hand, ready to use whenever. Another thing is paying off high interest debt. This is free returns, basically. So let's say you have credit card debt of 20%. That 20% is going to be eating at your money more than the money you'd be making from investing. So you want to handle that high interest debt before you start investing. So there are a few final things I want to talk about, and these are mistakes. So one of the things is you don't need to be checking your investing portfolio every day. Money in the stock market is made over years, not days. So there's no reason to check your portfolio every day and get your emotions tied into your portfolio. Another thing is don't get caught up in FOMO. So never have the fear of missing out. As you become more experienced in investing, or you're just scrolling on Twitter or Instagram or TikTok, people are going to say, buy this stock because it's going to explode 100% in the next week. Don't listen to it. The biggest problem people have is just buying into something they have no idea about because other people are talking about it. There's hype around it. Most people just lose all their money doing that. Even myself, when I first started investing, I saw a company that was being talked about go up 500% in one day, and I was like, I want to be in this. Well, I didn't know much about the company, and I'm still down in that stock today. Now, luckily, it was a super small amount invested, so it was really just a learning opportunity for myself, but don't make that same mistake. The last thing I want to talk about, I've already talked about it, but don't wait for the perfect time, because the perfect time does not exist. The best time, the perfect time to invest is today. Is as soon as you watch this video, you're like, I'm going to start today. To close off this video, I just want to say, if you're watching this video and you watch it all the way through, you are on the right track. You are trying to better yourself, and that's what matters most. You don't need thousands in the market. That's the problem. When I created Stock Study, I wanted to show people you don't need thousands to start investing. You can invest $10 a week, and that'll start adding up over time. Start creating those disciplined habits, investing small amounts weekly. Take a small portion of your paycheck, 10, 20% of your paychecks, and start investing it. The goal isn't to get rich overnight. It's to get rich eventually. The best thing you can do today is just start. I just want to close off again. I'm not a licensed financial advisor, meaning don't take what I'm saying as financial advice. I'm just telling you my personal experience and what I would personally do if I restarted today.